All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market opening up here Monday morning and some decent volumes for Monday morning. Coming in here, a few more volumes than what we saw on Friday. But we're about an hour into the trading session. Market down about 8 points. But we continue to see this market in a very highly differential situation where, we have, some stocks up very nicely, right? The Apples of the world, the Disneys of the world, Johnson and Johnsons of the world, and other stocks just getting, shellacked. The Halliburtons of the world, the Microns, Amazons of the world getting absolutely shellacked. So it is, it continues to be this very highly differential market, and I'll talk about that here in a moment. But before we do, let's go take a look at the challenge. We're only in one position right now, and let's see here. All right, let's go and maybe it'll let me sign in here. All right, there we go. We're in Bank of America. And Bank of America, we had pulled some off the other day, and here we are with the entry price was 30.72, meaning that was the price of the stock when we pulled our 12 contracts off. And if we go out and we look at the price of the stock right now, the price of the stock right now is 30.68, so it's 3 cents away from where we had pulled the other. It just hasn't gotten any kind of additional traction here. The option price is $1.84, so let's fill that in right here, and that's kind of where we sit here with Bank of America. Now, Bank of America hits its red time stop here this afternoon, and it is one where the option value has come down 6 cents from where we exited the other 40% of the position, so is something where if it were to close here, I'd probably most likely take it off, and it would take the challenge to all cash. There are no new signals here on the board this morning, but I do want to show you some of the crossover action that we are seeing out there early on this morning. Now, none of these crossovers here on the watch list are qualifying as a signal here just yet. But it is something where we could see that switch easily this afternoon. Now, here are the upside signals. Honeywell, or upside 3-7 crossovers, I should say. Honeywell, J&J, Pepsi, Procter and Gamble. Right? And if you come and look, Honeywell is one that's just kind of been dinking around here, had a downside 3-7 crossover on it last week, but didn't qualify as a trigger there. And trying to, get an upside crossover here today. We'll see. It could trigger bullish, but as it's sitting right now, it is not. J&J, you'll notice the stock, came down, hit a new low. First move off of the new low. We're almost never going to get a bullish signal there with the algorithm on that. Doesn't mean the stock can't go up. Just we're not going to get a bullish signal on that. Then we're going to go with Pepsi, which could turn into a signal here today. You can kind of see where the Stoke 39.1 is, trying to push back above 50, but nice little fresh 3-7 crossover on that. Consolidation risk is higher here this morning, so we'll see how that plays out. And then Procter & Gamble, right? But if you'll notice the names that have the 3-7 crossovers on them here today, they're more conservative names. J&J, Pepsi, Procter & Gamble, right? Now, if we go to the more aggressive, you see what stocks have crossovers. They are downside crossovers. Halliburton, JD, Triple M, Schlumberger, Twilio, Valero, Vulcan, U.S. Steel. Right now, U.S. Steel, fresh 3-7 downside crossover, but this is a new short-term high coming off a new short-term high. We can see that in the Stoke 39.1, so likely isn't going to trigger. We have something like a Vulcan Materials, which has had an upside crossover, then a downside, then an upside, now a downside. Every day it just switches. That tells you what is it in. It's absolute consolidation mode. We have something like a Triple M with a downside crossover with the stock up today, which we don't see very often, but can happen after some big moves. But no signal, no trigger there. And then, a Halliburton, which is also coming off a new short-term high, but very ugly action Halliburton today since the open. And then Valero, which could signal to the downside, but you can see where it is on the Stochs 39.1, sitting there to the, sitting there on the high side there with that, okay? It doesn't mean there's not stocks moving. It doesn't mean there's not stocks that, push on higher or push on lower. I got barked at about Disney earlier today that, how dare this not be a signal and not come in. And, yes, it had a 39.1 crossover last week, but was not a bullish signal. I can't go in and make them up. Right, I can't go and make them up, but it's also one of those things where, just because it's not a bullish signal doesn't mean it can't go up. But the way the algorithm is configured, it's, tweaked a little tighter than just 39 crossovers or 3.7 crossovers there with that. So anyway, there's stuff that yes is on the move, but if we look at some of the other stuff out there today, some of the Twilios of the world, some of the Adobes of the world, some of these tech areas, some pretty hefty sells. They tried to push into some new highs, now pulling on back, pushing on lower. So just a few kind of hefty sells coming in. Here to start this kind of Monday morning, so we'll see how that plays out. But again, it's kind of this rotational theme when it comes to the market. Okay. All right. I was asked this weekend if I'd share my thoughts on the market on the next video, so I'm going to do that here. And I don't share my thoughts on the market very often anymore, and I'm not going to, simply because it just doesn't matter when it comes to the challenge and to the algorithm. And it's one of those where my thoughts on the market are simple. They are over there on TM Academy, and you can see that here, and you can kind of come in, log in, and you can see what the market vibe looks like. And the market vibe is my thoughts on the market. Okay, and if we come in and we look at the market vibe, we can see that it is in a very neutral trend. It's all month been kind of back and forth between this neutral, bullish, type of read. But as we've seen the market push into new highs, we haven't seen additional strength come in on the market vibe. In fact, the internals have been very flat to kind of non-existent. Now, this year, neutral signals on the market have netted gains, right? In past years, neutral signals on the market, they've had losses. So 2018, when the market vibe has been neutral, the performance of the market, was tended to be slightly down on any given day. 2017 neutral days tended to be slightly up, but very fractional, very marginal. And the same goes for this year, right? Neutral days on the market, they're averaging up, 2 to 3 points a day when the market vibe is neutral. The bigger gains are coming in when it's bullish. The bigger losses are coming in when it's bearish. And we continue to see that play out. And if we look at the all-time performance of the market vibe, they're through 353 neutral days. The average daily gain is 0. Right? The total daily gains of those 353 trading days where the market vibe has been neutral is minus 1.45%. That is a very small, very flat number. You compare it to the bullish days, you compare it to the bearish days, they're very dramatic, right? So, what's my thought on the market? Well, the market internals are very neutral. So the market hasn't given this big sign that, it's going to go down or it's going to go up or it's going to do this or that. It's waiting on something, right? It's waiting on something. And I know, yes, people looking and go, it's good jobs report. Okay, market's waiting on that, and then it's going to go. And then the jobs report comes and goes, and the market doesn't move anywhere. And they're, oh, man, right? And that happens, right? That absolutely happens. But as I look at the market right now, there are a couple things that really kind of stand out to me. I showed this one last week, but it's the bullish percent index. The bullish percent index and the amount of flat in the bullish percent index. Kind of echoes the flat we see in the market vibe. But the last time we saw it this flat for this long was right back here in September. And the market fell sharply afterwards. Okay, it fell sharply afterwards. We're seeing it that flat right now. We're just seeing it that flat. That kind of just, nobody's paying that much attention to what's kind of going on out there. And, we're not seeing a whole lot of move. Now, just because we saw it that flat last year and the market went down, it doesn't mean, hey, flat, it has to go down. We saw it that flat back here near the kind of the fall of 2017, and, it went up afterwards, okay? But what I'm saying is this flat is very unusual when it comes to the bullish percent index. And what does it tell me? It tells me the market is going to move. It tells me the market's going to move, and it's going to move big. Doesn't tell me when. Doesn't tell me it's going to happen tomorrow, and the next day. But it tells me to be on guard because something pretty big is likely going to happen, right? And we saw flat right back here in 2016, and things went on down. As I look at what possibly could happen, right? We know what? We know from the sentiment surveys that the bearishness is still pretty high in this market. This is not a low bearish market. The bearishness is still pretty high. It is falling. Right? The bearishness is falling over the last couple of weeks as the market's gone nowhere. More bears have switched to bulls. But we're also going into this August time period. And I also showed this last week. And this kind of seasonal element with the market. And if we come in, let's see if I can pull it up here. Point figure, sharp charts. Let's get to seasonal maybe. They changed up the page here just a little bit. There we go. All right, so we'll just go to the S&P 500 seasonality-wise. And if we look over the last, let's go 10 years, right? Over the last 10 years, we can see August minus 1%, right? May minus 1%. These have been the two worst months for the market. Okay, and they're not months where they always go down in August, right? In fact, it's only gone down half the time. But they are months where where you have to kind of look and say, hey, things could get a little ugly here. But again, it's only 5 out of the last 9 years where the market, 5 out of the last 9 years, the market's actually gone up in August. So what do we derive from this? That, hey, when it goes down, it tends to go down pretty big. Right? And that's what we've seen in August during the course of this bull market, that on those years where it does go down, it tends to go down pretty big, but it's not always going down in August. In fact, it's gone up in August more than half the time. Is that something you want to play for a big bad rip lower? Not necessarily based on the seasonality, but we are going into that period of time where we can see a little more seasonality kind of creep into the market. And there are good reasons for, market drops in August. But, it is one that, hey, I'm on guard, I'm wary of, I'm alert for, just because I know it's a possibility. It's a high possibility, right? But then I go look at something like the new highs versus new lows. And I come in and what do we see? We see that over the course of this move to new highs, in fact, let me come back and put this on a 5-year chart, that more new highs have been set on this move in the market than we have seen since any move since 2017. What's significant about that? Well, what's significant about that is when more new highs are made, the market itself tends to go to another high. When the market's going to that new high, but there are fewer stocks participating, like right here at the end of 2017, that's when the market's in danger of seeing harder sell-offs, even though it's going to new highs. So yes, the market can sell off, but man, this new high, new low suggests that more new highs are coming in the future. And so we kind of have this mixed bag, which is what we see with the neutral market vibe, right? And so as I sit and I look at the market and I kind of just assess the market on a day by day basis, I don't see anything that's changing the story. The story is still the same. It's not about all money into the market and money out of the market. It's not about everybody into the pool and everybody out of the pool. It's about rotation. It continues to be about rotation in different sectors and different stocks, right? We can see one stock, collapse and underperform hard for a little while, and then, the market goes the other way and that stock outperforms, right? We see that all over the place. We see where laggards turn to leaders, leaders turn to laggards, and it has nothing to do with the performance of the market index as a whole, which is a very different style market than what the market was from 2013 to 2018. We actually have some of this 2010, 2011 differentiation, that has started to come back into the markets. And so it tells me, hey, I need to be on guard. I need to be aware of what's happening in the market for something major to shift. Because if something major shifts, we could see a different environment. But until then, to just continue to expect the environment we've had and, go forward from there. Now, I do think there is a catalyst that is up and coming that could change the rotational elements of the market and could actually create an everybody into the pool or everybody out of the pool type of move. And that is the Fed. And the Fed will most likely lower rates here on Wednesday by a quarter point. And I don't think that matters. I think what matters is what they say about the trajectory going forward. And we have seen that different Fed officials are on different sides of the aisle. We have seen more disagreement in Fed speak over the last month than we have seen in quite some time. And it is one of those things that ultimately I do think we could see the Fed catalyze one of those types of moves where all stocks go up or all stocks go down. I'm not saying that's going to happen, but I do think there's a good possibility. And I do think the market is soured on the Fed a little bit in terms of its reactions to the Fed. I don't think the Fed has been as market friendly as what it has been the majority of this year. And if we see the Fed turn and we see the Fed maybe not be as market friendly here this week, the markets may throw a little bit of a temper tantrum with that. We could see them sell off a little bit and pull on back and get kind of one of those kind of 3-week corrective type of moves come into play here. I think that's a risk. I think that's a possibility. I'm not saying that's going to happen. But last week was the first time in a while where I looked at some put spreads kind of deep out of the money, right? I didn't find anything I was too enamored with, so I'm still not in anything there. But, in all, the market is what it's been. And that is a very kind of just choppy, dicey, yes, drifting on higher, but without those kind of, without these types of streaks right here, right, that we saw at the beginning of June, which, really kind of helped to leap the challenge forward to another level, which was very nice. And let's face it, since the market's been stuck here around 3,000 the last 3 weeks, the challenge has kind of ground here. We've grinded on gains, right? But, it has definitely been a little bit of a grind here. Okay. All right, so those are my thoughts on the market. Again, I don't have a crystal ball. I don't have a magic 8-ball where I shake it and I go, oh, market's going up, market's going down. My thoughts generally revolve around the market vibe here. And, very rarely do they diverge off of what the market vibe is. And why? Because the market vibe was put together using the metrics that I use and that I have used, since I, became a fund manager or was a fund manager way back when. So it is something where, if I'm going to go out and look at, hey, how do I see the market? These are the metrics that I'm going to put into play to kind of assess it. And, the market vibe just kind of pulls them all together in a nice little package. So, that's generally my thought there on the market. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon, and we'll talk to you then. Take care.